Good afternoon, everyone, and welcome to the Talks and Show. Today, I have Pooja Sinha, who is a partner at GLS Law Firm, an international law firm headquartered out of Singapore. The GLS Group was recently shortlisted by Financial Times as the most innovative law firm out of Asia regarding new business and service delivery models. Previously, Pooja has worked in different roles as an capital markets lawyer within Linklaters, Clifford & Chance, and O'Melveny. Pooja, welcome to the Talks and Show.
Thanks, Prem. Excited to be on the show.
Fantastic. Pooja, you've been in a very interesting position, working out of Singapore. On one hand, you talk a lot on stage when it comes to blockchains, but on the other hand, you also work in the capital market space. What do you see right now happening, in the Asia Pacific market as new business models pop up?
Right, sure. So I think as you said, Prem, I've had sort of a unique vantage point on this sort of new digital economy because I'm actually a traditional capital markets lawyer as well, done IPOs, bond prospectuses, the kind of old school stuff. And then over the last 2 years, watched this very interesting pivot into digital securities and actually ended up getting my hands dirty, so to speak, on one of what I think was probably one of the first few STOs ever out of Asia. So I think it's really, just as an aside, I think it's a great time to actually be a capital markets lawyer and to just sort of, see the different innovations that are going on between the traditional and the digital. In terms of what's happening in Asia, again, very exciting place to be in the blockchain space. Many different things happening in different countries, and it's also sort of changing on a very regular basis. So let me first just kind of dive in and give you my perspective on what's happening in Singapore, which is where I'm based. Again, very exciting times in Singapore. The Monetary Authority of Singapore, which is the Singapore Market Securities Regulator, is trying very hard, as other regulators are as well, to find the balance between innovation and regulation. So there's actually been a slew of new regulations and or initiatives which have come out of Singapore over the last 1 year, which are specifically targeted towards the digital economy. So those three sort of headline initiatives are, firstly, the introduction of the Payment Services Act, a new omnibus legislation to regulate payment services, which weren't regulated before. The second exciting development is a special express sandbox that the MAS is making available to certain select businesses, some of which could be digital as well. And the third exciting development is the announcement that they will give out these digital bank licenses. Only 5 of them, and applications only available until the end of the year. So again, this is just kind of a sample of how the MAS is really trying to leap between the traditional and the digital itself. Now, one of the I'll talk a little bit more about the Payment Services Act because I think that's really a very interesting piece of legislation and certainly a very hot topic. It's probably been our number one query, across 2019 from overseas clients. So I think, before I delve into the specifics, I think an overarching point to make relating to what I said earlier is that some, of course, feel that the MAS has perhaps gone a little bit too far down the road of regulation, and it might sort of squeeze the average, not so well-funded startups out of the game. But again, this is a balance that's very difficult for any regulator to get right. So I think kudos to the MAS for kind of, really putting itself out there and coming up with something really bespoke and which is really trying sort of hard to make work in the Singapore context. So with that, just to tell you very briefly about the Payment Services Act, like I said, omnibus new legislation, which is going to require licensing of 7 types of payment activities. Most relevant for those in the cryptocurrency space is that effectively a digital asset exchange, including just a crypto to crypto or crypto to fiat exchange, would also need to be now licensed by the MAS. Okay. And interestingly, the act is actually out there, but it's not actually come into effect yet. It's going to come into effect. It's now near certain to be January 2020. And there might be some grandfathering provisions available under the law for those who are already operational before the law comes into effect. So that's something that, if folks are keen to kind of get a foot in the ground in Singapore, they should look into exploring that ASAP. But in effect, what the Payment Services Act does is that it imposes a licensing regime, but it also effectively requires a digital asset exchange to have an architecture in place which is quite similar to a traditional financial institution. So there needs to be an architecture for not just AML, CFT, but also transaction monitoring. Some types of services need to address user protection in a particular way as well. And then the continuing theme that the MS has always had on technology risks and how businesses are managing technology risks will continue to be a theme under the Payment Services Act as well. So in effect, it's kind of going for a little bit of a high watermark, typical Singapore approach to this new age business. So like I said, everybody's kind of waiting and watching to see how all of this is interpreted in practice, because that's the devil will lie in the detail. Obviously, some of these rules which are made for traditional financial institutions can't be so easily applied in the digital economy. So people are waiting for the law to come into effect and see how all of this works in practice.
I got it. So, I mean, obviously, Singapore being a financial hub in Asia is attracting, of course, for many decades now, a lot of money into the region. And looking
Yes.
at what's happening in the cryptocurrency space, basically what you're saying is that the banking laws, which have been slowly, throughout the years and decades, have been becoming more tough and tough, somehow is
Right.
going to also reflect on digital payments as it is. It will be not a fully free hand, but at the same time, they will have these kind of steps to monitor where the origin of the money is coming from, and which is also applicable to basically normal banking rules as we go forward.
Yes, absolutely. That's very well summarized for in non-lawyer terms.
So when will this be effective? I mean, is it going to be 2020, or we're going to see this year already?
So the MS has just, in fact, in the last few days, come out with an FAQ where I think it's said clearly that it will be Jan 2020. So, those who want to kind of get in the game, particularly to benefit from the grandfathering provisions, need to really get in quick, because come Jan 2020, this new law is going to be a reality in the digital asset space.
Okay. The reason why I'm asking, because I'm sitting here in Dubai and obviously heard a lot what's going on in the Singapore market, not only in the fintech or startup space, but more importantly is the fact that exchanges are getting accepted being out of there, and then somewhere there is a thin line between what is reality is being regulated and what is about to be regulated. So I want to make a bridge to talk about the sandbox and why it is important for the Asian Singapore environment, basically ecosystem, that this sandbox has been implemented by the MAS.
Right. So I think the MAS FinTech Sandbox has actually been around for, I think, a good 3-4 years already. And I think it's kind of had a little bit of mixed results, because, the whole idea of having the sandbox is, of course, kind of having the safe space for innovation. But it's only meant to be temporary. I mean, at the end of the sandbox, you're meant to have a plan to exit the sandbox and kind of comply with applicable rules. So actually, the record of companies in Singapore that have exited the sandbox is not that great. I mean, and that's just, that's neither here nor there, right? I mean, that's just kind of a function of the startup economy, and just taking a while to figure out, what really works in this new market. But I think the other interesting innovation, which I alluded to earlier, is this specific sandbox, this express sandbox, which you can even get into in 21 days for certain categories of activities.
Okay.
So that was announced a few months ago. I don't believe anyone's actually applied successfully yet. But I think, again, that's an example of how Singapore continues to innovate on its own innovations. So I think that 21 days sandbox will be useful for those that fall in the category, because at least you don't kind of have this endless waiting period where you're wondering whether you'll get into the sandbox, whether you should ramp up to get into the sandbox, or whether you should just look for opportunities elsewhere, which is certainly a conundrum that many of our startup clients, when they're trying to choose whether to, go sort of deeper into Singapore or wider into other jurisdictions. So that's what I will say about that's a sort of general point about the sandbox. Interestingly, the one Singapore company that did make it into the sandbox in the blockchain space is iStocks, which is a blockchain-enabled capital markets platform. So effectively, it's going to be like a blockchain-enabled mini stock exchange. But what's interesting is that they've clearly come out and said that they'll only accept payments in fiat, not in crypto. And I wonder if they had, wanted to accept crypto, whether they would have had a path into the sandbox or not. Because, Singapore has, notwithstanding its sort of fintech friendliness, had this sort of usual battle with, being comfortable with crypto that a lot of other, traditional high watermark economies have had as well. So that's, I think, been an interesting twist. But I think there's interesting announcements that we may see in the next few months of some more successful entrants into the sandbox, from what I hear from the grapevine. So I think that'll be something really to watch out for, because it will give us a good indication of how the MAS is thinking. Because of course they're a proactive regulator, but until you really sort of muck in, sometimes you don't, really get a feel for, what they're really thinking on the ground.
Okay, I got your point. So, I mean, obviously, this sandbox is meant for either small or medium-sized companies who have got a great idea to enter the market, be under scrutiny of a regulator, and then get very quickly, as you said, it can be as quick as 21 days to be up and running within that ecosystem. So that's something unique. Definitely, I've not heard before anything like this before. So, I mean, Singapore is known to be also for innovative ideas. So definitely this is something very unique to see how this goes, because usually when you go in the sandbox, you're there for minimum a year or 12 months before anything can happen. And they have, the regulators have also studied that this is not a threat to the normal day-to-day kind of businesses, and of course the investors are also protected from their side. So very interesting new development basically which is happening within that space. Now I want to jump into digital securities. We've been talking forward, backward about digital securities. I mean, one of the things is definitely there that going from the paper share towards a digital share, that is something we can see. But at the same time, we can also see that disintermediation will be happening. A lot of intermediaries who are now present in the process of buying any shares will be kind of eliminated. But looking closely now, how is the Singapore landscape when it comes to digital securities?
Right. So I think, it's, as far as just digital security is concerned, just looking at the Singapore regulatory position first. So I think the MAS has always maintained effectively the same position, which is that if it's a security, it's an investment product, then the regular laws apply. So all the kind of new regulation that we've seen come out of Singapore is not so much in the digital securities space, because their stand is that you're just covered under the traditional legal regime, which is, I think, a fair position to take. In terms of what's happening in the market, again, I mean, I think this is similar to the rest of the world. Tons and tons of inquiries, tons of interest, and tons of service providers. But sometimes the actual, deals haven't quite sort of lived up to the expectation. But what we've seen is certainly a big change from last year's. In terms of the kind of industries that are exploring and embracing, digital securities and digitization. So asset management is, of course, one of them, and you're familiar with the space. Fund formation is another one, and then real estate. And in some cases, it's all about having the benefits of the digital security, just in terms of faster liquidity times, which of course a lot of traditional electronic clearing systems also have. but it's just that, because they were built, 30, 40 decades ago and haven't really had to innovate much, they're not really very user-friendly anymore. So digital securities is kind of a, step up from the traditional securities, dematerialized securities landscape. So there's one benefit just from making that leap in terms of innovating traditional capital markets. But I think the other more sort of interesting side effect of this attention on digital securities that it's just sort of forced everybody to kind of go back to the basics, just in terms of how to structure very traditional industries, which again just have not been open to innovation before. So if we look at the kind of deals we've been looking at in the fund formation space and the real estate space, it's not just about having a tokenized security at the end product, as the end product and the benefits that those would have to, say, a paper share, but it's also about putting in place a new architecture for how the economics and other sort of legal aspects of these structures will operate. Again, using the learnings from the traditional space and starting afresh. So you're offering something that's new and often more commercial than the traditional structures.
Okay. And you mentioned in the beginning, basically, there are about 5 companies shortlisted in kind of getting this special license, or was this regarding digital banks, actually?
Digital banks. So the MAS has said that they will give out 5 digital bank licenses, and the applications are open until the end of the year. Okay. And it's, as far as we know, nobody's applied yet. So there's a lot of talk on the grapevine. Will it be just, the big players or the big transport players who kind of, try and set up a banking arm? Or will it be sort of startups from overseas that are already doing this in other jurisdictions and now wanting to get the Singapore stamp? So it'll be very interesting to see who actually applies. And of course, it's not being regulated in Singapore is not for the faint-hearted. That goes across the board, whether it's a digital bank, whether it's a Payment Services Act. I mean, it's a high watermark jurisdiction. So under the digital bank regime, as an example, I don't recall the exact figure, but you need to have a fairly high paid up capital. And you also need to have a path to profitability. And you need to be showing that you're serving some underserved segment of the Singapore economy. So, it's kind of a very holistic approach that the IS is taking. So, it's kind of a loop. If we'll specify a high watermark threshold, and we'll be quite selective. But if you do, then obviously you have the stamp of being regulated in Singapore. And then in the long term, I think the hope is that this will also solve the practical challenges that a lot of startups face in Singapore, which is not being able to get bank accounts, particularly within the crypto business. So I think this is kind of the loop of regulation that the MAS is sort of indirectly trying to close as well through these approaches.
I got it. Actually, I've never lived in Singapore, but friends of mine who live in Singapore have always told me that basically banking services basically are very, very efficient as it is. So I'm very, very curious how these innovators will come in and make it even smoother as we go forward. Because one of my friends basically gave the idea that, he came to work in Singapore and wanted a credit card, for example. So, in the morning, he gave some details basically, and after 3 hours of shopping, his credit card was basically issued. So these kind of, very quick turnaround systems is really, really amazing. Where, for example, where I come from in Europe, basically, it can take 2 weeks basically to get a credit card issued, and that's really a problem when it comes to services basically. But Singapore has been always at the forefront out of these things. Even back in the days when internet banking was the first thing, was a very hot basically item which was going on. I remember now. I mean, now every bank is doing internet banking. Without that, we cannot. The last time I really went to a branch was like 6 months ago. So and the whole idea is now that this digital banking would even make this whole process, even from backside end to end, totally paperless. A lot of benefit for the user, bringing lower fees to to it because it doesn't have the legacy systems which older
Right.
banks have, but at the same time also be able to appeal to younger crowd, basically. I mean, if you look in Europe again, like companies like Revolut or Monzo, basically, they appeal to the millennial kind of crowd, and it has
Right.
seen that how this digital banking kind of service within Singapore will be obviously deployed. But very exciting to see that Singapore is really seriously looking at and willing to give 5 licenses to players in the market to basically look how this market is going to be go forward as it is. So
Yes. I
again,
just wanted to
sure, go ahead.
sorry. I just want to very briefly touch upon, we didn't touch upon the rest of Asia. So just very briefly, I think what Singapore is doing is really making it pull up ahead of the competition as well. Across Asia, again, there are many initiatives, similar initiatives to promote blockchain regulation, but no one's gone as far as Singapore. I mean, as we know, in India, they've kind of gone a step backward in that they really dislike crypto. Thailand has come out with a new regime, but it's a civil law country, so it remains to be seen whether it'll be really embraced by international players. And then Malaysia's attitude towards crypto and digital assets is slowly thawing, but still it's a little bit slow. And it's going to take time before there's a full U-turn. So I think just to kind of contrast Singapore with the rest of Asia, it just makes it look, it just puts it in an even more forward pole position, so to speak.
I got it. But then we have also these bigger countries like Indonesia, which is so much spread out, for example, or the Philippines,
Right.
which are so much spread out, where, for them, they have this rural banking kind of system, for example, in the Philippines. It's, these kind of places where you go to a pawn shop basically to get your money to be to get your money remitted, is really new business models coming out of these places, and where digital banking also can play a big role basically to help them out as we go forward. As remittances are still on the higher side, being here in the GCC region, a lot of expats, and what do a lot of expats do? They send money back home. So it comes back to either these countries like Indonesia or Philippines or India, for that matter, to look as it goes forward.
Yes, and I think all this innovation in Singapore is, just often as a hub, right? Because I mean, we're a city-state of 5 to 6 million people, so this is just often the hub to, develop innovations, test market it, get high watermark Singapore regulation, and then export it across Southeast Asia. So that's a trend we've seen that will continue.
Absolutely, and as far as I also know, I mean, it's not really like a Switzerland, but it's definitely a safe haven, Singapore, it's seen, when it comes to, banking with, and that's why a lot of money influx happens basically into Singapore, according to my knowledge, of the region. So, something I wanted to talk, I mean, we talked a little bit about Asia, and, we touched a little bit on real estate, and apparently, a lot of countries are really looking at this fractionalized ownership of real estate. But I mean, if you look also what has happened in the UK, for example, there are examples of paintings being also fractionalized in a matter that you tokenize that, and then basically out of that, you're able to own, let's say, a small piece of a Picasso or Andy Warhol kind of painting, to have a piece and ownership of it, and from there, create some value in future, as people might think that these paintings might be of more value in the future. So looking at fractional ownership within Singapore, I mean, obviously, there's a lot of real estate in Singapore as itself, but how are regulators looking actually at fractional ownership?
Right. So I think, it's interesting because, like I said, last year we worked on what was likely one of the first few STOs in Asia, and that was actually the art space. And we've continued to get lots of queries since. So, I mean, I think, again, in Singapore, like I said before, the approach to digital ownership, be it in fractional form or bonds or loans, is just that it kind of falls within the regular regime from a securities regulation perspective. So that's kind of the overarching theme. In terms of having a legal regime that actually supports fractional ownership, I mean, there isn't anything specifically in Singapore. Of course, you have kind of the traditional architecture of unit trusts and business trusts, and certainly business trusts have been fairly popular in Singapore, and real estate investment trusts as well. So that's kind of the sort of analogous architecture that we have in place already, but that's under the traditional space. So if you wanted to get a REIT listed in Singapore as of date, you have to get approval from the MAS and SGX and all of that. So we've not really seen kind of a pure real estate deal done in a pure fractional ownership form, at least here in Singapore. So even on our deal, what we effectively did was kind of a synthetic structure that replicated benefits and downsides of a fractional ownership using a corporate vehicle, but not kind of having a bespoke fractional ownership regime that we could use.
Okay. So it's still in the making, basically, and according to your, the projects you've seen, basically, it's not being implemented as such. Is that correct?
Right.
Okay.
Yes. I think they're all kind of using a corporate vehicle and then applying synthetic legal tools to achieve the same economic effect as a pure fractional ownership.
All right. So just my last question before I'm going to let you go is the fact that, you've been recently on stage talking about compliance within the region and compliance issues as such. And is there a trend which you maybe are able to share with us, or what was the message basically where you were on stage regarding compliance issues within the region?
Right. So actually, I spoke on a very interesting topic, which was ethical regulation. So I think, in summary, ethical regulations is even more important than before because, I think it's now well established in compliance literature that what you really need to achieve a good compliance result is a compliant culture. And that's really something that's ethics backed. And interestingly, digitization and the blockchain has potentially a lot to do with that as well. Because the whole idea of having all the efficiencies of not just digital securities, but just having more digital implementation of traditional fundraisings is that you move more and more aspects of process towards the digital space, and that actually frees up time and energy to focus on the softer things, such as establishing a compliant culture in your organization. So that's one of the points that I actually talked about as well, how ethics, digitization, blockchain, it's actually all connected. So there is more of a link between the traditional and the new age economy than we think.
I got it. I mean, I'm a big believer of good culture. If you have good culture in your company, basically, you will also,
Right.
convey that to your clients as such going forward. So, culture is very, very much needed. And of course, if a company has the culture of collaboration and going forward versus then people are really, trying to put each other down, that will only help that people want to cut corners. And when cutting corners can happen, then obviously there can be a bigger reputation risk
Right.
looking forward towards it. All right. So I want to wrap it up here, Pooja. It has been a pleasure talking to you and understanding how the Singapore Asia Pacific market is right now running, and really good to see that some regulations regarding digital payments, for example, is really shaping up right now. And of course, it's like a new thing that regulators have come out, or MAS has come out with, a 21-day a sandbox where companies can be kind of regulated in such a period of time. So I really want to thank you for taking out time today to talk to us, and I hope to see you soon somewhere in Asia or in Dubai.
Thanks, Prem. Pleasure to chat, and look forward to being on the show again.
All right. Thank you.
Thank you. Bye.